Hi everyone, welcome to episode 5 of The Roots of Money. I'm excited to give you this episode about Forex. I know it's a big topic, everyone is talking about it, everyone is scared of Forex, everyone is just like, what? You're talking about Forex now? Yes, I want to talk about it. I want you guys to know what Forex is because I do not want you to miss out because of what people are saying or perception or what you have seen other people doing. I want you to understand it from scratch, everything that you need to know about Forex. That's what I'm going to do today. What I love about this podcast is that I try to make people understand things in the simplest way. So this is me today trying to explain everything that you guys need to know about Forex. All right, so let's start. What is Forex? Forex is a foreign exchange market, meaning there are two markets or two currencies, a South African currency, which is a rand, and a US currency, which is a dollar. We pair these two and we are saying a dollar is going to go up against the rand, or the dollar will go down against the rand. That means that the rand is going to go up, the dollar is going to go down. So that's basically what we are betting on. I will put betting in an inverted commas because it's really not gambling, it's not betting, but in this case, for the lack of a better way. Anyway, that's basically what is happening in the Forex market. We are saying this is what's going to happen against this. This currency is going to perform like this against this currency. By now, you know that a currency fluctuates a lot. Today, you will find a rand that is 18 rand. Tomorrow, you'll find that a rand is 19 rand, 20 rand, or maybe 15 rand, 16 rand. It fluctuates. So as the dollar, it does that. And there are factors that contribute for the dollar to do that. So traders, what we call traders, retail traders, they are actually betting on those factors that the dollar or a rand is going to perform like this. They just look at patterns, they just look at what's happening in the news, they just look at the history, they look at so many information just to make an informed decision, at least to do a thorough research that is convincing enough to make a decision. So basically, when someone is a trader or when someone is trading, is basically making guesses. It is a guessing game. You are guessing that this is what's going to happen based on the history movement, based on the historical movement. So that's basically what Forex is. Forex is just a foreign exchange. For instance, if I now leave South Africa and I go to China, I'm going to use yen there. So I need to convert my money when I get to the airport. So now I'm going to convert against their money. If their yen is maybe a 20 rand against dollar, that means 1 yen is 20 rand. So if I need if I need 200 yens, I need to say 200 yens times 20. That's how much I'm going to need for me to have 20 yens, because that's how currency works. So that's basically it. If I were to close this episode right now, if I were to close this podcast about this particular topic, it would be it. It is really about exchanging currencies. It's about saying this currency is going to behave like this against this. This is what's going to happen against this. Yes, I know I have prepared notes, but I just thought let me first explain it in this layman term, because I know a lot of people, they have so much going on in their minds about what Forex is. Is this thing a scam? Is this thing even legit? Is this thing what? So that's what I'm basically here to do today in this podcast. I'm actually very happy that I'm tackling this topic because a lot of people are bombarding me, asking me about Forex and all of that. By the way, I do not really teach Forex. I do have a group where I just give free information, but I don't really have classes where I teach Forex, just so we are clear. And I don't inbox people. I don't do anything that is shady around Forex. All right, so a second question, is Forex a scam? No, Forex is not a scam. Forex is just currencies that are traded. I think I've explained it enough. It is not a scam. It is 100% legit. Banks are doing it. Other institutions are doing it. Everyone is doing it. So it is not a wrong thing. People are just trading. They are trading against certain, currencies. It's just currency trading. You are just comparing this currency against this one, and then you are saying this one is going to do better than this one's going to do better than this one. It's really all about it. That's it. So it's not a scam. And yes, there are people that are scamming honest people with Forex. That is what is happening through the platform. Just like how people will scam you, in the ATMs. Would you say banks are scams? No. It's people who know how to temper the ATM machines, who know how to manipulate your mind so that you do certain things and then you give them your money. You can't say the bank is a scam. It is not. So as Forex is not a scam as a system or whatever that you want to call it. It's people who are using it. There are bad people out there, and plenty of them, millions of them, that are scamming people. But Forex itself, it is not a scam, just so you know. And please tell your friends and your friends' friends. While we are in this point, it is people that are making Forex look like a scam, because they are introducing this fancy life that you're gonna have 7 cars, you're gonna have a car, a house, you're gonna do vacations, you're gonna wear now branded clothes, expensive clothes, watches, and all of that. It is how they portray it. And I hate it, because the way they are marketing Forex, it's like you're getting there to be rich, and it's an instant gratification. It's like you're gonna make money tomorrow. You will never make money on Forex tomorrow. Actually, it's one of my questions. How long will it take you to make money on Forex? To learn alone, it will take you 3 to 6 months to understand the basics, to know the jargons, what is buy and sell, what is stop, what is resistance, what is support, what is indicators, all of those things. It will take you time just to know them and actually apply them. So another 6 months, it would be for you to now practice. It'll be for you to use a demo account and also test different strategies until you find a strategy that resonates with you. So how long will it take you to learn Forex? Number one, this is subjective. It may take you even less. It can take you 2 weeks, 3 weeks. But if you really want to master it, number one, don't be, someone who wants money now. Be patient. Be patient. That's what it takes. Number two, learn as much as possible. Don't rush. Just be patient. And then I am saying it will take you 6 to a year to learn Forex. And then from there, you will then be good at it. How would you know that you are good at Forex? If you are making trades and then you win at least 70% and above of your trades, then you can say you probably know how to do it now. You actually know, you know how to actually go about Forex now. If you get 70%, that's quite good. So number one, Forex is not a scam. Number two, it will take you 6 to a year to learn Forex fully. Yes, it can take you less than that. I know some people might disagree with this. It may take you less than that, but it depends also on your commitment. It depends on whether you're doing this full-time or you're doing it part-time. So it's subjective, but all I'm saying is 6 months to a year. This is another big question that I get. How much do you need to start trading? This is a big question. You don't need a lot of money, believe it or not. You can even start with 100 rand. You can start with 500 rand. You can start with 1,000 rand. Don't hear people telling you that you need to start with 10,000, 20,000, 100,000, all of that. Let me tell you, you trade with whatever you have. Right now, I just told you that a rand is 20 rand against the dollar. So what does that tell you? It tells you that you can actually start from 20 rand. You can start from 30 rand. You can start from, whatever amount that you want to start in. The only thing that you need to know is, of course, if you put smaller amount, the gains are also going to be small. If you put more money, you're also going to make more money. That's the only thing. But you can start with any amount of your choice. Of course, you just need to look at your broker, what's their minimum fee. But I know brokers now have gone down. Gone are the days where it used to be very expensive to trade. In fact, at some point you needed 10,000 for you just to start trading, to register with certain brokers. Not anymore. Now you can start with 100 rand, 500 rand, 1,000 rand. Just so you clear, you don't need millions for you to start trading. The most important thing here is to learn the skill and master the strategy. And lastly, on this point, before I go on my script, by the way, I haven't even started with my script. Lastly, I need you guys to do two things for me. Number one, be patient. Be patient. These things, they need patience. I do not know anything in this world that doesn't require one to be patient. Please be patient. That is number one. Number two, master just one or two strategies. There are so many strategies that are being suggested by traders out there. They work for them. They may work for them. They may not work for you. So please choose one or two or even three strategies that you can use or that you will master 100%. Then focus on it. Even if your trade is not, allowing you to trade for a week or two, it is fine. But that is your trade. You will stick to those principles. You will stick to those strategies. You'll stick to whatever that you want to do. That's what will get you to understand and master Forex. Have a strategy and be patient. Back on the script, trading strategies. This is what I would like to encourage you to do. Number one, backtest. Backtest at least 50 to 100 setups. Backtest. It is important to backtest. What is to backtest? There are platforms like Tradingview that allows you to go back into previous trades and play those trades and place trade in previous trades and see if you're gonna get things right. You need to do it over and over and over again. So when I say do it 50 times, I'm not even playing. Do it 50 to 100 times for you to at least understand and master it. So that's number one. These are strategies now that I'm giving you, by the way. Number two, start with a demo account. Never go straight into a trading account, a real trading account. Please start with a demo account. Always start with a demo account. How long must you be on a demo account? I would suggest that you go from 3 months to 6 months just on a demo account for you to be confident about what you're doing. I know some of you would be rushing to make money. You want to start maybe in 2 weeks, in 3 weeks, in 5 weeks. And I know people who are going to tell you that you can start, in 2 days or whatever. I'm telling you, if you do want to master this, take your time, please. Number three, start trading on a real account after 3 or 6 months. That's where now you start practicing. And what are you striving for here? You are striving for 70% trading wins. You want to make sure that you win at least 70% of your trades. Yes, you will lose trades. Yes, you will lose trades. This is one thing that you need to be prepared for. Emotionally and mentally prepared that you will lose. Please never use your emotions to trade. It's very important. A lot of people, they start gambling. Trading is not gambling. They start gambling because they have lost and they want to enter immediately because now they want to gain money, and they will lose even further. They will lose even more. So use emotional intelligence. In fact, I would like to recommend a book called Emotional Intelligence 2.0. Read that book along with Forex theory and practice. Then you'll master both your mental health, your emotionally, and then you will know the technical skills. All that combination will get you going. What are the requirements for you to start trading? So what do you need for you to start trading? Number one, You need knowledge. So meaning you need to read a lot of books, you need to watch a lot of videos, you need maybe to have a mentor. That's number one. Number two, gain a skill. So now practice it. There is something that is said by John Maxwell. I want you to get it. He says, as a leader, when you teach someone, you must do it first and then they watch. The second time, you do it with them. You show them exactly how to do it. The third time, you let them do it and then you just watch. The first time, you do it yourself. So this is where you watch people who are trading. You just watch them. The second time, you do it with them. While they are doing it, you are also mimicking what they are doing. You are copying what they are doing. The third time, you have to do it alone so that you gain the strength of doing it. So that's a strategy that I'm giving you. Today, I'm giving you the blueprint, by the way. Number three, you need to do a lot of research. Number four, dedicate time. You need a lot of time in learning trading Forex. By the way, it's not difficult once you understand how easy it is to trade. You just need to master certain things. You just need to know, immediately when you look at the chart, there are things that you need to see, and then you know what to do once you master it. It's not even a big thing. I know people, they want to make this Forex thing so difficult. It is not that difficult. You just need to master certain things, and they like to use the jargons, they like to use technical terms. This Forex thing is not difficult. Trust me on this one. And real people who knows how Forex works, who won't terrify you with Forex, they'll tell you it's not. Anyway, let's go back. And then you need to register with the Forex broker. You need to register with the broker. What is a broker? A broker is a middleman between you and the market. They are the middlemen. You can't trade directly, with the institutions. They are the middlemen. You pay them the money, and then they connect you to the platforms or to the exchange that actually, take your trades and all of that. So a broker, you can't trade, by the way, without a broker. So you need a broker. You need to register the broker. There are so many brokers out there. I will recommend some at the end of the video. Number two, set up a trading environment or a platform. So that means you need MetaTrader 4 or MetaTrader 5, or you need Tradingview. Those are platforms that you can use to trade. I know some brokers, they have their own platforms where you can, trade in them. It's up to you which platform, but whatever platform you want to trade on, please be comfortable with it. Know what tools you find where, know everything about it. That's it, basically. You just need to understand and know the tool itself, know the platform itself. Another thing that people are finding it difficult is just to understand the technology, is to understand the tools. Where do you find indicators? Where do you find trend lines? Where do you place your trade? Where do you put a stop loss? Where do you do this? How do you calculate what, and how do you read? So it's all those things. Just learn how to do them, and then you'll be good to go. And then set up a demo account. I've already said that at least in your demo account, before you start trading on a real account, you must have wins of over 70% or more. And you need to make sure that you mitigate risks as much as possible. And then start funding your account. Fund your account. It's another step that is following. And then please join groups, certain groups, forums. Look at other people who are doing stuff. Visit or attend seminars, attend webinars, read books, watch videos, all of that. That's where you start, basically. Let's talk about what drives the market. Let's start talking about fundamental analysis. What is fundamental analysis? Fundamental analysis, it is looking at the qualitative information about the markets, what influence the currencies or the currency or the market or the economy to behave in a certain way. These are the things that basically you look at. You look at economic indicators, you look at central bank policies, you look at geopolitical factors, you look at market sentiments, what are people saying about the market and all of that on social media and all of that. You look at intermarket analysis, you look at economic and politics news. So let me tell you this, all these things that I've talked about here, please go research about them and understand what they are, but I'm gonna briefly talk about them. They are just information that is just out there that influence the market. For instance, economic indicators. There are things in the economy that tells you what's going to happen. Maybe there's an inflation, maybe there's depression, maybe there's rise of interest rates, maybe petrol prices going up or down. All of those things, they say something. When you talk about geopolitics, you talk about wars that are affecting the world. What are political clutches that are out there? What is economic clutches that are out there that are influencing currencies across the world? So you basically look at all these things. It's very, very important for you to look at all of that. And then let's go to technical analysis. Technical analysis, look at it as quantitative data. So it's so it's numeric information that you look at to make the decision. So you look at candle charts, you look at trend analysis or trends analysis. So you analyze whether the trend is an uptrend or it's a downtrend or it's horizontal. You look at all of those things. It's very, very important for you to know what is an uptrend, what is a downtrend, what is a lower low, lower high, and all of that. Understand all of that lingo. It's very, very important for you to know. It's just the normal lingo that I think it's very important to know. If it's a high high, higher low, what does that mean for you? And then you need to, of course, understand different chart patterns. There are different chart patterns that are out there that have been studied. Companies have invested billions of rands in studying certain patterns that happens over time in the charts, in the market. Those charts, they do show from time to time. Those patterns, they do show from time to time. You just need to know them. If this pattern shows, could it happen that this is what's going to happen? Yes, the pattern that you see might go against what you're doing, but these are patterns that have been tested from time and time again and have been proven at least over 70 times or 70% that they are always right, or they are 70% always right. So you can look at those patterns to make the decision. But this is one thing I like about Forex. You don't have to use one factor to make a decision. You can look at patterns, you can look at the trends, you can look at indicators, you can look at volumes, you can look at so many things first for you to make the right decision. It's a combination that helps you to make the right decision, because if you may only just look at the pattern, sometimes it may mislead you. So you want to look at bits and pieces of everything. That's another thing that you need to look at. It's support and resistance levels. What are those and how they work? You also need to look at technical indicators. I did speak about technical indicators. I'm going to give you the popular ones as we go. You also need to look at volume analysis. You also need to know and understand what is a stop loss. For you to know Forex, you can't do it without understanding all of these things that I'm talking about. And then we move on, trading strategies. Number one, we have what we call trend following. So these are people who are trading based on how the trend is performing. If the trend is going up, please place your trade against that. And by the way, this is what they are saying: always follow the trend, never go against the trend. Number two, breakout trending. Number three, range trading. Number four, mean revision. Number five, scalping. Number six, trading just only with fundamental information, doing fundamental analysis. Another one, you can also do swing trading. You can also do event-driven trading or arbitrage trading. I want to talk about event trading. Event trading is when, if the news have just broke, and then you go and place your trade. Or if you know that President X or Y is going to be talking today, and you are anticipating that this is going to happen in that talk, and you think this is how it's going to affect the market, then you place your trade. So basically, event trading or event-driven trading. It's people who are trading based on news, based on current affairs. What is happening in the world? What is happening in the economy? What is happening in political area? Or all of that. So that's basically what it is. So there are people who merely trade just because of events, of news events. There are people who just trade because of fundamental analysis. They look at certain factors, then they place their trade. There are different things that people look at. You don't have to look at all of these things. Just choose your battle. Type of traders. We have day traders, we have swing traders, we have position traders, we have scalpers, we have high frequency traders, and lastly we have event driven traders. I've already explained that one. Please know and understand what are all these traders and what's the difference between a day trader and a swing trader, a position trader and a scalp. Know and understand and choose which trader you want to be. You don't have to be all of this. Just choose one to say, Mina, I want to be a photographer. You see, out of all these fields that are out there, there's engineering, there's medicine, there's what. You just chose to be a photographer. Even here in the trading market, you don't have to be, a swing trader and day trader and all of this. Be just one thing. What is it that you want to be? Be that and nothing else. Yes, it doesn't mean that you can't be a doctor and a photographer. You can, but it always works best if you are a master of one discipline or profession. Who are the playmakers in the Forex market or in the foreign market? By the way, Forex comes from foreign market, just so you know. These are type of playmakers in the Forex market. Number one, we have what you call retail traders. Everyone that you see on social media talking about Forex, they are normally called retail traders. So they are just, in fact, they contribute this small piece of the pie. The people who are actually trading billions on a daily basis are what we call institutional traders. Institutional traders are the real guys, are the real deals. They are the real deals. These are the guys that moves the market. Once they've entered and then do something, they shift the market altogether. That's what you need to know. Market makers, there are people who are actually pushing the market to do certain things. Those are people, who are controlling the exchange, supposedly. Forex major pairs. Check these ones. Number one, it's Euro against USD. So these two, they are the most traded, pairs. It's the Euro against US dollar. Number two, it's US dollar against Japanese yen. Number three, it's British pound against US dollar. Number four, it's US dollar against Swiss franc. It's US dollar against Canadian dollar. It is also Australian dollar against US dollar. It is New Zealand dollar against US dollar. Basically, these are the major pairs that you will find that are traded a lot. What now you need to know is when to trade what in terms of the time zone. But these are the the biggest one. It doesn't mean you can't trade with your rand, with your naira, with all these other currencies that are out there, but I'm saying the popular ones. These are the ones that are popular, but you can still make money with any other currency, provided that you know what you're doing, you know how that currency works, how strong it gets, you know what influences it and all of that. But yes, these are the big ones, but you can trade other currencies. So what are the asset classes that you can trade in the Forex market? You can trade currencies, as I said, number one. Number two, you can trade stock. So meaning you can say, Apple is going to go down or up today. You see, you don't trade against a certain currency. You are just saying it's going to behave a certain way. You just trade a commodity that, a gold is going to go up. It's going to go up. This is what's going to happen. So you can trade that. A currency, you trade two currencies, pairs of currency, or you trade a stock against itself to say it's going to go up, it's going to go down. So that's another analysis altogether. If you are looking at the company itself, now you look at what is happening in the company, you look at the management of the company, you look at the product, you look at the sector, you look at their financials, you look at so many other things now that contribute to the company itself. It's a different game altogether, analyzing stock and analyzing currency. You need to know how to analyze stock, or what tools to use and what tools to use to analyze Forex. So those are the things. Some you can use for both, some is just strictly for, a certain asset class. Another asset class is commodities. You can trade commodities. We normally abbreviate it as ETFs. So it's exchange traded funds. Those are group of stock or group of certain asset classes that are sharing certain, characteristics or similar characteristics. Lastly, you can trade cryptocurrency. Those are all asset classes that you can trade. Number one, currencies. Two, equities or stocks. Number three, commodities. Number four, ETFs. Number five, cryptocurrencies. All of these you can trade them at any given point. You just need to know how to analyze each and every asset class. What are the things you need to look at, and deploy a certain strategy for every asset class. But you can trade all of this. Some people, they prefer to trade only gold and silver and platinum commodities, that is. Some people, they just prefer to trade currencies, dollar against yen, dollar against Japanese yen or whatever. Some people, they prefer to trade stock. So it's up to you. All right, so when not to trade, when not to enter the market at all. Number one, you don't trade on holidays. Number two, you don't trade after Friday afternoons. It's normally very volatile, or very quiet. You don't trade on December, towards the month end of December. And lastly, please don't trade when you are angry. And please note, markets open from Monday to Friday. They don't open after hours, after business hours. They only work during office hours in your respective countries. These are the popular candle patterns. Number one, we have what we call the 3-line strike pattern. 3-line strike pattern. Number two, we have what we call 3 black crow and 3 white soldiers. This is engulfing bar. We'll talk about it in the practical session. This is just a podcast. We also have what we call high kite pattern. We also have what we call rising or falling 3 method. We also have what we call hammer or shooting star. We also have what we call dragonfly or gravestone dodge. Those are popular patterns. It doesn't mean that these are the only patterns. There is hundreds and hundreds of patterns that are out there, but these are one of the popular ones. Please know and understand them. So this is how it works with pattern. Just master one pattern, and if you go on a chart, know that, oh, okay, this is the pattern that I'm going to look at. If this pattern is being created, this is what I'm going to do. If this pattern is going to do this, I'm going to put my entry point. That's basically what are patterns for. You just look at them, look at whether the charts are creating those patterns that you have studied, and then if you see those patterns, then you do a certain things. Maybe you place a trade, maybe you start putting an alert saying, okay, now this pattern is created, now this is what I'm anticipating is going to happen. So patterns are sort of like things that are helping you to map up and make the right decisions. There are 3 different type of charts. There is a line chart, there is a bar chart, and there is a candle chart. And let me tell you, the famous one is the candle chart. It doesn't mean that some traders don't use a line chart and they don't also use a bar chart. Some people, they use a certain chart for a certain currency or a certain market or a certain asset class. It is up to them. But 90% of the population, or 90% of the traders at least, they use candle charts. Why? Because they show different things. They show what we call a wick, which is a small onion stick on top, and then in the bottom it also shows the body. It also shows, the color. It shows different things that makes them to decide better. So for some reason, that's what they choose. It gives more information, it gives more indicators, so to say. We also have three trend lines. We have uptrend, we have downtrend, and we also have what we call horizontal. All these things, guys, that I'm telling you, it's for you now to go and study them. I'm just giving you stuff that you need to know and understand about Forex. Really, I'm not teaching you exactly how to do it. I'm just giving you things that you need to know that are happening and that people are using. So from here, do a thorough research. And lastly, we have what we call leverage, pips, and spreads. Please know what these are. Leverage basically is, I have 1,000 rand, and then I will go to a broker and borrow another 1,000 rand, and then now I have 2,000 to trade instead of using 1,000 rand. If you know all of what I've just said in this podcast and you do your research, you will know Forex, because it's now about understanding what is leverage and how to use it, and what is a candlestick, how to use it, what is a pattern. All of these things are very important. And there's another jargon that they will throw a lot. If you want to know Forex, you need to know what is a bull market, what is a bear market. A bull market is a market that is going up, so that means it's a positive graph, it's going up. And then a bear market, it's normally where things are going down, it's not going very well, it's negative stuff going on there. So it's a bear market. And then a bull market, it's when it's going up. If you know these things, everything that I've talked about, congratulations, you now know what Forex is in a layman's term. And then from here, go and study these things. All the best. I hope I've dismantled everything that you guys, were confused about when it comes to Forex. To know Forex is to know all of these things that I talked about. Anything other than this, it's up there. So if you know indicators, trend lines, all of these things that I've spoken about, you are good to go. All the best. Please be patient and don't use your emotions, use your mind. Cheers.